All right, welcome everyone. Super excited to have you all here. Thank you for your patience. We are going to have our official 2026 trading game plan session. The point of this session is to make sure that you are all prepared and that you have the systems in place and the wherewithal about what areas of the market you should be looking at. What are some things that you should be concerned about? Not in a way of negativity, but on the way of where your focus and mind should be when we're thinking about trading this year. We're going to cover what happened last year. We're going to cover some trends that we see coming into this year. We're going to give some of our top picks that we're looking at this year, our top five picks out of all of them, just for the start of this year. There's going to be so much to happen this year. I mean, we have so many days, a whole year ahead of us. So there's a lot that is going to be subject to change for sure. But we want to make sure that you have the resources so that you can start this year right. And any mistakes, any things you need to overcome that may have happened in previous years, or if you're restarting, this is your opportunity such that you can jump in and have a bit more consistency under your belt. All right. Really excited to have you all here with us today. Here, we're gonna get going. All right. Press one if you're ready. Press one if you hear me. We're gonna be going down this road. All right. Happy New Year to all. Let's make this new year a great one. Okay. And so, as we're thinking about the 2026 landscape, all right, we're going to have a few things that we want to cover, and we want to make sure that we learn from 2025. We don't just go off of the heels of 2025 for what worked then. There will have to be some adjustments that will have to happen going into this year. All right. And so I'm going to first start with what we call the 2025 hangover. All right. So, what did most traders get wrong? All right. We're going to cover this a little bit here and then a little bit later as well. But what often was some of the avenues where people got caught up, where they weren't able to find full success, was oftentimes built off of what they may have seen in 2024 that may have worked in terms of identifying what platforms are available with AI, what are the use cases of AI. And 2025 certainly had a bunch of opportunities when it came to AI and investing in AI. But there's a component that's important when we're thinking about buying into the hype and not knowing exactly where to put your money's worth, right? And so there's many times that people got overwhelmed by what was the available opportunities that existed as they related to AI or other sectors in technology. And they either found themselves often in sideways chop for quite a bit of the year, or that they were not able to capitalize on finding where the actual trends and more, actually, resolved within. The second mistake that was very often in 2025 was really not knowing where your entry is. This is actually a concept or an issue that happens in any year for any type of trader, right? But finding where you can fit in terms of your trades and those opportunities, you really need to have your exact process. And you really can't deviate from that. I think as we reset some of our ideals here as we're starting this year, we don't want to carry too much over of the baggage that we had from this previous year. It's very easy, and in some ways, I'm going to even speak a bit candidly here. I didn't trade today. I wasn't present for the market, and I know quite a lot of our students or those in the community definitely, like to have that guidance and have the space such that they're able to, rely on and see what's available there in the market. But there's quite a bit of area that if you are deviating or just not fully knowing like what your entry points, entry strategies, what you're even looking for, you're gonna get this almost like whiplash from so much going on. And anybody who had looked at the market today, I had only seen it, afterwards. Um, Goodness, right? Today was to just start the year was already a wild day. But there's no concern there. Again, we have a whole 260 days ahead of us. There's just a space where we want to be able to think clearly about what we're doing and be able to deliver exactly and ha know with precision what opportunities are right for us as we're, navigating so many stocks, over 400 here in in the stock market. Um, One of the things to understand as well is one uncomfortable truth is that what I want to establish here from so many of you today is that I want to be able to achieve and bring forth your motivations such that you're able to maintain based on the systems that we can at least get started today, or that you have your checklist and you can plug in some of the resources that we can provide you today because oftentimes we get very motivated at the start of the year, and very quickly, especially if we don't see those results happen immediately, you can get flustered and the motivation can fade. But what we're looking to do is to make sure that there's action to the level of motivation that you have, not just watching this, listening in, and that being the point of, and the end point of how much involvement you have with a skill that you're looking to take so seriously. Okay. And then we're also going to speak on the road ahead. We're in terms of how 2026 is going to shape up, how we're going to base some of our information of the upcoming year based on how 2025 went, even how 2024, 2023 went, especially how much the S&P 500 itself has moved so much over the past 3 years. Is it going to continue? Are we going to see even further highs, further all-time highs? That's something we're going to uncover today. All right. Um, if you do not already, the first thing I want you guys to do, if you have not already, is to download the Teach Trade app. All right. Make sure that you have these apps that are currently on the screen. Okay. Um, Discord, TradingView, Teach Trade app. Here we're going to be adding some really cool features here, and making sure that each week we keep you updated with what our current outlook is on the market, and that you are also able to test some of the skills and more that we're going to be building on and thinking of today. All right. So make sure if you want to keep updated on everything that we have going on, feel free to have the Teach Trade app. You can scan that code on the screen. I'm gonna give you 5 seconds. Five, four, three, two. There you go. All right. So what we're going to do here, this is how we're going to start this conversation. All right. So this is what we're going to call the reality check here. All right. Um, the real biggest thing, a big thing here that we're really going to identify for you is that there are many valuations that are likely going to come down. Okay. Based on research from many of these top firms, who are analysts of the market, 2026 it can have some positivity, but there's going to be a lot of negativity on the side of some valuations coming down. We have certainly reached all-time highs again and again on the S&P 500. But what's really important is that stocks and more are more expensive than ever, right? Maybe not than ever, but we're getting close to it. You may have not heard of this index. It's called the Shiller-Cape ratio. One thing I forgot to even mention at the very top of today's call, which I typically do, is to make sure you take notes. Make sure you either have the Notes app, a physical notepad. You can have OneNote by Microsoft. Just make sure that you're taking note of some of these things. Even though this is being recorded, I want to make sure that you're able to take note of some of the important areas that we're mentioning and be able to ask us questions during this week about anything that we may have talked about today. But listen to this, the Shiller-Cape ratio. All right. So what this is, it actually measures the stock price in relation to earnings per share over a 10-year period. So on the actual S&P 500 itself, which comprises of 500 companies, of course, um, that this valuation of the S&P 500, the only time that the actual stock price related to its earnings per share and how much higher it has been than the actual share price. The only other time this has been this high was the year 2000, right? And one thing that we note about the year 2000, something that started, very promisingly in the year Y2K, for those who were around there. I was only 3 years old at that time. Can you believe it? But when that happened, we certainly had a massive correction following that. All right. Not going to say that the massive correction is looking to happen this year, but there's some space where we are up on the expensive side. We have a lot of, happenstance in the AI space. And what you're going to see over these course of these next few months are going to be that some of these or a lot of these companies are going to find themselves needing to prove themselves. All right. They're going to pr need to prove themselves for what revenues and profits are they actually producing over these next few months, actually. Earnings season is right around the corner. We have many earnings being reported this month. And then the month after is when we're going to have a lot of growth stocks having to discuss what actually was produced from any AI integrations or revenues versus what they were expected. I feel a bloodbath coming, honestly. And there's going to be some space that the winners are going to be the ones that have proven themselves and found space in such a competitive environment as it's been right now. So that's a high level analysis about what we're going to see start in 2026. Depending on how this first month goes is when we're going to see how the trend gets set for the rest of the year. All right. And so oh, yes. And one thing I wanted to note is that with valuations coming down, that is not a bad thing, right? I did say negativity, oh, but that's only if it pulls back a bit, right? The thing that's great, especially for my newer traders to address you, buying opportunities will be provided so well across many different tickers, all right? And we've actually seen a bit of a start to that towards the end of last year. And as we progress, those opportunities will be able to, find entries, especially in long-term plays. They don't have to be in the top ranked stocks, but you're going to find some really great investment opportunities and even dividend plays as we progress this year. So that's something to be excited about. I'm certainly looking forward to the leaps, which are the long-term expiration trades. Those are going to be proven for how they produce any type of outcomes here. One thing to note as well about 2026, this is very important. And so rate cuts, 2025, we had plenty of rate cuts, several rate cuts, even as the president and the Federal Chair Powell were batting heads just a bit. We had some significant rate cuts, which were a contributor to a lot of growth stocks being able to live another life, second wind of sorts, following finally being able to have rate cuts happen as jobs reports came out and more essentially, led the Fed to, want to cut rates, but while also pumping money into the market contributing to higher rates of stock prices, going up and more. Next year, we are going to slow that down. Jobs numbers recently showed to the Fed that rate cuts aren't necessary. They don't need to. go too far with how much they're going to bring down interest rates. When interest rates do come down, it does make the smaller players and it enables them to have a bit more oomph for how much they're able to invest into their own companies and as because investment typically needs to take on a lot of debt in order to be successful. So what we are going to see as a trend is there are going to be some small players in the market that really have their extreme um, just breakout. All right. It's like they're having their magazine cover moment, is what I may describe it as. Because in 2023 and 2024, growth stocks, small caps, the small players, they had been really hurt, very hurt for years, and not really given any level of strength to um, uphold a long-term run to the upside. We saw some tr stocks last year, like quantum computing. Make note of that sector because we're going to bring it up again later. We saw quantum computing, we saw data center stocks, which started as small cap stocks and through multiple, just, through the multiples of increase and exponential increase that they went through, they became very largely valuable companies, but still not as high as, of course, the trillion-dollar players that we've come to love and know. But that's certainly important right here for these rate cuts. All right. Um, and so we're going to have an interest rate decision this month. It's very likely they're going to pause. They've already said that they're going to pause. They're not going to have a rate cut. It's likely going to stay the same. That's going to be expected. How the market reacts and how we follow through with that, that's what we want to be looking at very closely as we go to the second half of this month, in particular in January. Um, and so our sector watch here, one thing that's really important, these are some of the major sectors. So feel free to take a screenshot of this page right here. Um, Also to take some notes, as we mentioned again. Some major sectors that we're seeing some opportunity. Meta and Google are leading here with a lot of spend on AI companies, as well as a lot of success. Meta has been acquiring companies and in making major investments that may turn around on them. Keep watch on Meta as we look through this first month of the year, because what their earnings reports based on their spend and what they're able to accomplish in terms of profits will certainly set a major tone, I'd say, for the whole tech market, honestly, in terms of AI and more, because they're taking some very significant risks. Google, on the other hand, is a major player, probably one of the most important players right now here as it relates to utilization of AI and what profits can be produced out of that. They are now leading um, in the acquisition space here for because of the market share that they have as a search company. OpenAI has they made their moment for about a cute 2 years, and they still have a lot of strength there. A lot of you, I'm sure, still use ChatGPT and more. But some major players, especially Anthropic, Claude, has presented itself. Claude is not publicly traded, Anthropic, excuse me, but Google is, and Google has really broken ground in terms of the efficacy of their use case, especially for coding as well as development measures, um, which will be likely used by enterprise companies. And think about the investment there and then how much that they've been accomplishing on that side with their AI models, where they are essentially recapturing and establishing their ground versus the cute OpenAI who's been trying to snag its customer base. So Google, think about that for a long-term investment. Um, if Google can provide a long-term investment, it can provide a dip. That is something that we can certainly, see there. Um, I'm gonna invite Jamal here to the stage for a moment, not to throw you too off guard here, Jamal, but I know if you had a bit of if you wanted to share any bit of info here on the other sectors, if you may have been watching them.
Sure. So it kind of reads how you see it on the screen there. So the XLF, the financial sectors. So because we're getting those interest rate drops, that does help the banks a lot. And so when the banks can lower the interest rates, they can also lower, I guess you can call it APR percentages or basically the interest rates on the credit loans that they give. So the loans don't have to be as expensive for us, and they can also give out more loans. So that's good for the consumer as well as other businesses that need loans for, cap expense or even acquisitions. So that promotes a lot of, mergers, acquisitions of different businesses. And so it's all around good in the financial sector, and that kind of trickles out to the business and industries in general. And then you have XLU, the utilities. And so this is kind of a sneak attack because utilities is normally like a defensive stock. But in this day and age, we have with the AI infrastructure and the need for build out on that. And the one thing that they don't tell you is that AI and data centers and all of those types of things require a lot of power and energy. And so the utilities would also be something to keep on watch because of basically how it says the low growth from data centers, EVs, and industry-wide power demand. So it's basically a industry-wide demand for more power, especially when it comes to this new technology where you talk about AI and data centers. They need a lot of energy, so you want to keep your eyes on those utility stocks. And then last but not least, just in accordance with the general trend, we're going to have continued growth from the semiconductor sector. And then again, mentioning AI and the new fields in tech, not necessarily only new technology and new industries that AI is developing, but then the revenue growth from those new industries that are popping up because of the continued reliance on AI and the growth of AI. So you just want to also be considerate and mindful of the technology sector in general.
Absolutely. Absolutely. No, thank you, Maul. It's very important that we track these specific sectors right here um, throughout the entire year. All right. We've even already started to see major effect on the financial sector, for example, for how that's been shaping up. Um, Today alone. There's been many stocks that went off today, and they've seen massive growth just in a single trading session. But we've seen a lot, a decent trend from the banks, especially as we ride this wave of these lowered interest rates, you know. So that's certainly something that we're going to be looking out for as we sort of, grow throughout this year. And we have quite a number of stocks that we're looking to cover and, make sure that we have our P's and Q's on hand here. Okay. So, we're gonna just get and jump into this. All right. We are going to cover our top five picks. All right. And so we have a lot of picks, quite a number of few, but we're gonna highlight the top five and give our reasoning here. Um, so we want to just make sure we're on target. Okay, I see you guys in the chat. Um, Feel free to put any comments or thoughts in the chat about anything that we're talking about as well. We're going to be heavily covering a lot in this next section. So definitely, glad to see you guys. And yeah, we're going to be answering questions once we have some availability too. So the first stock may not seem too much of a surprise to anybody. But if it is, it's because you haven't liked using this platform, but they have a lot in store and it's going to get even crazy. That an incredible 2025, 2026 is going to be an even bigger outcome for this company. And so the first one is Robinhood. All right. And so none of these are in order. All right. Just letting you guys know, this is just our top five based on the charts as well as some of the data that we've collected about each company. Robinhood, fundamentally, Robinhood fundamentally has something very significant going on this year. And those major two items are that they are moving towards tokenizing the top stocks, right? The top stocks in the S&P 500, as well as the most traded stocks. What does that mean? That means that tokenizing means that they are converting the actual stocks in terms of being able to be traded on chain, on crypto chain, right? What that does is that makes trading be available in external markets where regulation can be very tight or access to actual US markets to trade them is not widely available. All right. And so what that means is, and I also ask if there's anyone here from outside of the United States, make yourself known in the chat. Because when you are outside of the United States, it is likely you don't really have access to Robinhood. Um, this level of expansion this year is going to enable them to capture a wider market share of users and more, especially as they're expanding into banking this year, which is the next piece on which that upon acquisition of more customers, that they will also be able to furnish and groom, don't take that word too much, um, their audience into relying on them for banking services because of how often people use Robinhood. People are already using it for their retirement accounts, so on and so forth, right? One of the biggest outcomes that's going to happen, besides the banking piece here on Robinhood, is that they are launching their social trading platform this year. Their social trading platform are going to allow traders like me or yourself to be able to post trades directly on Robinhood, enter them, and that people can follow you and copy your trades directly, and that you can have a full visibility on what trades are being happened and what are actually wins or losses, right? So that creates a lot of trust, demand, and competition that can translate into an even further demand for utilization of the app and everything that it has in depth. That's going to be something that all of those three things that I mentioned are going to launch this year. And so that while they've already had a positive 2025, and you'd think that there might be not too much space for upwards growth. I would set my price target on Robinhood at $200. No joke. $200 by the end of this year. Not quite sure about that. But I would say that it has a really strong chance of achieving that same level of growth throughout this year if it's able to cool down a little bit further. It's cooled down for about 2 months now. Is it able to achieve more upside from there? That's what we have to see, whether it's this month in January or later. It's already to another great start that we've seen, and we'll get into other reasons for why the chart looks great. As you can see on this screen, if you just simplify it, it does have a bit of a wedge formation shape. It did have, a bit of a double top at one point, right? And that was fulfilled. The McDonald's logo came on down. It was trading in a downwards trend. But what we may see right here is that it's making a higher low. We're going to be talking specifically in our playbook why that's very important. It made a higher low, um, hit some previous lows, formed a hammer, which any Academy student knows that when it's hammer time, we pay attention. And so we're going to likely see quite a bit of upside in the near future. If January can start this off, that would be a great opportunity for a bit of an investment. The last thing, actually, about Robinhood, and for what we're going to bring up later today, for quite a few of you who are already familiar, it has an LVL setup. And the LVL we're going to get to, it has an LVL setup on the month, where we're reversing back through the range. Some people within here may have, I don't know if you took note of that. Robinhood for January may be the trade. Just saying. That's where we're looking to see we can have growth all the way to 140 already, a $20 move or so from current levels. So think about that. That could happen by the end of January based on everything we assess there. So Robinhood is crazy. All right. Let me know if any of you guys saw anything on Robinhood or if you have any thoughts there as well. Certainly gonna, get to it. Uh, so number two, in terms of our top picks, after our top picks, we're going to go over our blueprint. So make sure to stay for that, as well as the playbook for exactly what you need to do to start this year off. All right, and be able to capture some of these trades as we see them. It's the one trade that some of you may have heard me scream from the top of my lungs, and that has been my biggest trade of 2025. That stock is the big R, Rivian. All right. Rivian is one of my top picks of 2026. All right. It only just got started. All right. What we see for Rivian, many things, right? But what I will warn is that it has so much potential, but quite a lot of risk as well. This is what I would say is a glass cannon pick. This is the glass cannon pick of the rest of the picks that we have here of our five. All right. Why is a glass cannon? Let's start with the good things it has. It's they are upgrading their infrastructure such that they have lower costs. Before Rivians were cost like $85,000. They're dropping that price in their next model to $40,000. They're following the Tesla route, where dropping the price and targeting the consumer market, they're looking to have some positive outcomes based off of that. All right. They're implementing AI into their system. They gave some demos. That's what even got us to this point where price ran from $16 up to 22. It had a 30% move in just 2 weeks. After that, they're also getting into robotics and automation, the self-driving, just like Tesla. They're essentially capturing a lot of that with their trucks and looking for some opportunity to be there as they are able to achieve some high margins there. So what I'm looking for, you can write this down. My price target for Rivian in 2026 is at the current moment 28. All right, 28 is my current idea here. All right. And so that's about a 50% increase, a 40 to 50% increase from current levels. Crazy market movement for that price. A couple of weeks ago, I was thinking 30, 40. There's a lot of factors, and this is where the glass in the glass cannon comes from. EVs under this administration and the removal of the tax credits for buying an EV put things in a bit of a tricky spot for electric vehicles in America. All right. Electric vehicles in China and other parts of the world. Wow. Yay. Amazing rainbows. In America, Americans, they want their gas vehicles. And it's going to be quite a bit of some stuff to adopt this new change. There may be some hurdles. Essentially, this is the year that Rivian has to prove themselves. In February, which is when their earnings is going to be, that's going to be the moment that they have to say, all right, this is it. This is what we're projecting. They have to raise their outcomes. They really have to create a narrative to actually deliver on what they're promising, right? What we see on the charts for Rivian is that we see a on the year at the very tail end of 2025, we triggered the high of 2024. Right now, we don't have any triggers. We're actually just stuck right in the range because I mean it's just the second day of the year, so we just have to see it play out. It either can gravitate towards the 22 level once again, or have to find a bit of its footing after about a month or so of consolidation. So we'll see. January, I'm not expecting this to be the most amazing start for Rivian, at least for January. But maybe towards the tail end or going into the February, we may see some results. It just probably has to cool off for a moment. And those warning factors that I gave there, that's where we have to highly consider. But keep in mind, 28 for shares, for leaps. I'm currently sitting in 2027 leaps for Rivian at $25 is my strike. All right. So $28, that's my target. No higher, no lower. All right. CVX. All right. This is our next one. Why do you guys think this one's on our list for our Teach Trade picks, top five picks? I'm sure you guys have seen it, right? It's been a crazy couple of days and weeks. So CVX, the main major American company in Venezuela, right? The main major company in Venezuela for oil, right? We started off today. This thing was up 10% immediately to start this week. Absolutely insane. It came down a bit and bounced as it started this week. So that was something a bit interesting. We are seeing whatever the outcome is, internationally and with this conflict and all that we have to, understand. That's a certain level of outcomes that we're going to really have to have a close eye on as we watch, especially this first 3 months of this year. All right. So what we uh, are looking at is that we need to see, what we can create from this or what types of outcomes we can see there. All right. Um, how we're gonna look towards this happening is we see a falling wedge. It's been in a downtrend for quite a bit, but towards the tail end of 2025, we had some growth back to the top of the trend, if you're able to see that here. All right. After that, we've made a bit of some highs. We had a small downtrend again, a wedge, but now we hit a low, re-entered the range, back to a previous high. Now we have the potential for breakout. So watch this at 168. 168 is going to be a very significant level that this needs to achieve first. I'd say 176 is going to be the stopping point. If you wanted to invest now, you'd think about that up to 176 for CVX. All right. So if you're able to find an entry, buy a skip, that's not a leap, but you can get 6 months out, maybe looking for 175 as your target. That can be some space there. Feel free to look at some of these other oil companies on our extended list, which we're going to email to you guys. We have SLB, Schlumberger. That is also a significant company to be thinking about as this oil situation, certainly central to the United States, but also worldwide. This is going to be a situation where we have to keep a very close eye on all, oil companies and as well as any companies to do drilling and mining, because the quest for energy, especially how it's able to provide for AI, for other industries, for robotics, and possibly. inevitably, some point potentially, right? Quantum computing. What will that bring us at that breakthrough? Whoever controls that has a lot of resource. All right. Everyone good? Everyone understand? You guys with us? You feeling okay? All right, Jamal, you want to cover this next one here? Next, we have IWM, popular in the streets here.
Sure, if you want to tag me in. So IWM is basically a play on some of the things that we talked about earlier. IWM basically is the representation of the smallest 2000 stocks in the Russell 3000 index. So basically, these are small cap stocks. So their market capitalization usually ranges from like anywhere from $30 million up to $10 billion. So why these are important again is because of the interest rate cuts. Interest rate cuts, like I said, they trickle down into other businesses, specifically small caps that can, leverage and get more money so that they can grow into, eventually mid caps and maybe even large caps. So this is how a small company that you never heard of becomes and grows into a household name. So all of these companies like a Apple, like a Meta, like a Palantir had to start from somewhere. And specifically Palantir is, kind of a household name, especially in a trading household. Palantir started as, a small cap stock in IWM. And so I specifically say to watch for IWM because we might have some sort of rotation where we already see a lot of buying of these small cap stocks and more buying even of IWM. I believe in 1 month there was like $3 billion that went into IWM specifically. And then over the past month, I think there was like $2 billion. So you see an influx of institutional buying into these small caps, which could insinuate that there may be some sort of rotation from these mega cap stocks like a Nvidia, like a Google, like a Apple. These big corporations might be shying away from getting more money, and then more money might be diverted from those big cap stocks into these small cap stocks. Another reason why you want to focus on these is because most of them are undervalued. And so as their earnings continue to grow, their evaluations will also start to grow, which will cause, them to start gaining even more momentum. So in general, you want to be aware of what IWM is doing because IWM signals that the market and institutions are bullish. IWM, I can say, is like the rookies. So if we're in a game, let's just say that this is the NBA and the stocks are the NBA, and then you have your Nvidias, which are your MVPs, you have your Apples, your MVPs, veterans, they've been around for a while. When, owners start to put big money into rookies, that means they're taking a risk. They're being bullish on the future. And so that's what it kind of constitutes when you see big money being placed into the rookies and the more risky stocks like IWM is that they're betting on the future and they're betting on these evaluations and this growth. They're betting on growth. So you also want to be, mindful of IWM. Right now, it currently is kind of consolidating a little bit where it's offering a return into the trend. So you just want to be mindful of it, trying to break and hold over those 250-ish levels. I believe it probably did that today. It is kind of already at all-time highs, but again, like I said, this can continue to grow as they keep putting more money into these undervalued and neglected stocks. Okay, so this next one here is a very risky play. I'm not going to lie. This is Black Sky Technologies. And so what they do is imagine, satellites in space that take pictures of Earth in real time. So basically, you can imagine like they're sort of a Google Earth, but way, way more advanced and updated consistently throughout the day. So these satellite images, they combine with artificial intelligence to help governments, businesses, and military organizations monitor important locations around the world. So basically, this is literally the eye in the sky that is spying on you. Um, so similar to a Palantir, yeah, they get a lot of government contracts. This is relatively they have a lot of new technology that is rolling out. So this is a high risk, high reward type of stock. I want to do note that they are currently not profitable yet, but there's a lot of companies right now that are not profitable that are getting lots and lots of money. What you want to see is them continuing to get more and more contracts. Right now, they have strong, strong support with analysts, with them being an overwhelmingly strong buy. And if you actually look at the chart, you see these consistent dips and then rips, dips and then rips. And so right now we're kind of in the middle of a rip from a dip on Black Sky. This is a stock that used to be somebody as well. I think they had at their highest, they were around 100 and maybe let's say 40-ish dollars. Yep, way, way below all-time high. Currently there, I want to say at around $23 the month of today, January. And in retrospective, let's say around November, they were $13. So they've almost doubled in the course of from late November to right now. This stock has a lot of potential momentum, and I just at the least want you all to have this on your radar. It could potentially go to levels 24, it could get to 24 easily. And then next after 24 could potentially be 2750-ish. And then we could be talking about 31, around the 31 with within this year. So just keep that one on your radars. Again, it's kind of like a baby Palantir with the eyes in the sky, using the satellites to spy on locations, people, and areas of significant interest.
So absolutely, this is looking like for those who loved Palantir, what can we find here, right? Under $25, full of opportunity. We'll see what this can be able to provide. I already see an upwards trend, like Jamal identified here. Certainly something that we want to encourage you guys to go ahead and get even more research done. All right. And we're going to provide, again, the full list of notes and more of all of this that we're talking about here. And so those are our five. All right. Um, did you answer the question about your price target on IWM, Jamal?
Well, IWM, like I was saying, is at all-time highs around those areas. So we don't
Yeah.
necessarily have areas to the left
Yeah.
to, try to mark for it to go. But with IWM, I would just say to continue to watch it to see if it keeps making those higher highs. It definitely can get to, 258, which is the all-time high I'm looking at. And then probably from there, we would want to kind of draw a fib and get some extensions on where it can go.
Absolutely. So everyone, um, we have quite a few other tickers as well. Those are our top five. Those are our top five. Any surprises anymore? I know Blue Sky or BKSY certainly something that we want to, throw there that you go ahead and do your research. We have even more that are not as popular stocks that are available here and that we're going to be looking at as we go throughout the year. So, for example, Lunar, which is known as Intuitive Machines, SLB. So we have a list of 10 other stocks that we're also watching along the way. All of this, if you did register to this meeting, This will be emailed to you. All right. That's what we're going to be able to provide here. All right. We're going to be covering even more. You guys are going to see this on the list, especially within your email. And any other tickers, once we, reach the end of our presentation, we're going to see what we can identify and discuss as well. If there's anything you guys want to share as well that you think should be on our radars, and that you would want to even have another opinion or anything else, we're certainly looking for anything that finds itself as a unique opportunity. Every year in the market, it seems like one or a couple of players that we've never heard of before will have its moment. Last year it was for me Cypher and Iren, APLD, Applied Digital. Those were all stocks that really had some significant moments as we saw them and what their outcomes were last year. Um, and so for anything there, we want to see what other things we have covered there. What I'm going to throw at you as well, SERV, put that on your list. Again, we're after this, we're going into our playbook. Um, SERV, very great opportunity. I would say XYZ. I almost regret to have those letters leave my mouth. Um, but XYZ does have a very, interesting setup that is available right now on its chart. I hate saying XYV because they have hurt me very badly in the past, but I will not let any prior abuse prevent me from any opportunity there is to, make some more. Um, but all right, but we're definitely going to collect what you guys are saying here in the chat and also, leave that for a bit later. All right. Thanks, everyone. So right now we are going to jump into the monthly game plan. All right. And so what we're going to talk about here is a bit about how I stay consistent. Um, and not to diss anyone else, but how to distance and make the difference with yourself for maintaining consistency where everyone else may be guessing. All right. We have Invest with Les here in the chat with us. Thank you for joining in, Les. We are going to cover some really cool uh, we're going to cover some really cool opportunities here. Right now, I hear. Oop, okay. So the monthly game plan process. Some of this might be revealing, and definitely let me know if any of this has ever happened to you. The problem with most traders, unfortunately, is that we start January motivated. You guys are here on this call. You're like, 2026 is my year. I'm going to knock it out the park. This is my time. All right. And we want to make sure that you have that level of motivation longer than just the first month of the year, the new year, new me. What happens is that is kind of a bit of a trend that happens oftentimes is that if the results do not show themselves immediately, there's a wide range of drop off. All right. And also such that the level of falling out of discipline, oversizing with trades that just lead to insurmountable abilities to come back from the losses that may have happened, or a challenging level of mental occupation that these areas have for, what you're looking to produce. And that's where you may eventually fall into the random trade trap. Our goal this year is that trades do not feel random. Okay. Like they must not feel random. And in a way, we shouldn't hate the market too much. We can hate it a little bit. Sometimes I wake up and I'm like, screw all of this. But it's the level of discipline and just and sticking to the structure and system that's in place so I can, even at the most annoying or most challenging points that we face in the market, that there's still a recovery protocol in place so that we can pivot and navigate to our next space here. All right. So that's going to be something that we sort of cover and jump into. I can drop before we jump further into this section. I'm going to drop just a few screenshots of the top five here that we covered, just in case we have anyone who joined us a bit late. No worries. I know the question you may have is this damn guy with the blue hat recording this meeting? And the answer is yes, he is. All right. And so I'm just dropping this here in the chat so you guys have it, anyone who joined in late. Um, but again, we're going to provide the full list via an email after we're done with this here. All right. So after our recording is saved to this meeting, sometimes Zoom takes a bit of some time to save that. That's what we're going to be looking at. All right. And so we're going to discuss um, a bit of the couple of steps that I take to maintain consistency. Some of you, many of you may have already heard the letters that are here on my hat. While some other areas, I'm going to tell you what the very first things that you should do starting this year. And right after we end this call, there's a couple of items that you must do in order to be successful during this year. All right. This is what you have to do. The very first thing, again, LVL. So, for anyone who doesn't know, my system of trading is called the LVL. And what does that stand for? That stands for liquidity, validating the trend, locking on to targets on the other side. All right. It's a very highly simplified version of a top-down look of the market, but simplifying execution such that you're able to identify where reversals are happening every single time so that you are not the one getting reversed on, and that you always know exactly where you are entering, as well as how much money and opportunity is going to be made from any given trade that you take every single time. Also, such that you don't have to go looking too far for where trades like this are happening, and such that you don't have to guess if a trade is high quality or high probability. You will already know it way beforehand. All right. Before you don't look back at something saying, "Oh man, I wish I was in there." And I'm sure that's what a lot of you are thinking and feeling. Anyone who has traded and looked at the market today and didn't get the opportunity that they wanted. Today was certainly an outcome where we saw many things run, many things happen, and there's a feeling that overcomes a lot of you, a lot of traders, that if you see all these things running and you're not in, it's like you missed out. You didn't make the money. It's almost you feel like you lost money, even though you didn't, but you didn't do anything about it. That's a feeling we're looking to shake. We're looking to make reality with what we have put forth and made ready for the time that we have here. All right. We're going to go over this very quickly. We're not going to take too much time on this is in terms of the system, but you can feel free to take a screenshot of this if you ever needed a checklist, if you ever needed a specific area for what you need to look for in the market, or at least the system I use to easily identify, what we need to look at in the market. Um, Typically, what a very high quality trade looks like, where we can capture a lot of movement and know when it's going to happen, is when, like we said, we identify where lows and highs are, where lows and highs are. We just identify where they are on the chart. Number one, if price trades through a low and we bounce, that is identifying the reversal happening. If we see price trade through a low, we do not immediately take puts. A lot of people do that. And it's the reason why 80 or 90% of traders get cooked, is because we look to follow price wherever it's going and just take it as we're looking at breaks of certain levels. We actually have to think of the opposite. Think of those as opportunities for entries while everyone else is getting hurt to the downside. We're looking to ride the wave back towards the other side where we are able to have some space of movement. And how much movement are we getting? We're getting movement other to the other side, all right, until we play this game again. All right, so it's like a game. It's like a game if you're playing rock, paper, scissors or such, right? Where there's three things to pay attention to. All right. And so if we're looking at this from each step, we are always looking at when we're watching price movements, looking for price to reverse from a previous low. And then after that happens, to form higher lows after bouncing. Bounce, higher lows telling us that we are forming a trend up, lock on to the other side. All right. That is what we follow and that's what I follow exclusively in order to have consistency in my trades. When I am looking for a trade opportunity, I really am only looking for this or some version of this. Some people here are familiar with the tools that we use in accordance with this, but it's not limited to just those tools. It's often that if we want to simplify even further, is that we're just finding price reversing back into a range. If this high and this low defines a range like such, it's about us trading, hitting one side of a range down here and reversing back into the range to the other side. It is so simple. I want you guys not just about thinking, hey, okay, I learned this. I got trading right now, right? I'm not trying to say that. What I'm saying is that it's important during this year that you pay attention to the ranges that stocks are trading within and learn the ability about how to identify a range. That part is simple. Doing the trading, doing the patience, your entries, obviously a challenge, right? And we can make it easier on you for the discipline or rather the steps required to do so. I just want to make sure that the idea of identifying where ranges are and how stocks trade within them puts you so far ahead and can at least eliminate the whiplash that you're seeing or feeling when you see all of these candles and all of this data and information. All right. That's the major point that I want to make with this slide. Caleb in chat, you said this changed the game for you learning this. That is something that we want to absolutely feel and for anyone else here that we continue this practice and we're able to get some of that as we identify some opportunities here. Now, for the steps that you guys have to take after this call, so write these down and take these screenshots. All right. The very first thing that you need to do this year, 2026, is you need to mark the opening prices. Those two words are going to be words you hear from me very often this year. Opening prices. This is something that is not always talked about by a lot of space or resources out there in the trading space, right? The opening prices. So what is that? It is where the price of a stock opened on a certain given time period or time frame, right? So think about last Friday, January 2nd, at 9:30 a.m. Eastern or 6:30 a.m. Pacific, where the market opened, the US markets opened. That was the opening price for all these stocks. And that particular specific price will remain at that level for the entire year, right? Because you can't change it. Once an opening price happens, that is one thing you can't change. But why is it important? If we see here on this stock down here, this stock I believe is NVO, Novo Nordisk. Novo Nordisk began its year here at about 5160 or 5170, right? Where it opened on January 2nd, which was the very first trading day of 2026. That is where January started, where we had where the month opened, and that is where the year opened, where 2026 started, right? These two levels are going to be exactly the same until February 1st, right? These levels are going to be exactly the same until February 1st. Why then do we really need to pay attention here? And why would we think today Novo Nordisk is rising super high? It's not just because of everything happening in the market and the wars and whatnot. It is really because it is trading above these two levels, right? Whether a stock is above or below its yearly opening price is extremely significant for the momentum and trends that that stock will remain with for a certain period of time. There are going to be a quite handful of stocks that they will run the entirety of this month of January because they will just stay and remain above that yearly open. And because of that, that's going to be something useful that we can have as a swing trade to start this year. I already mentioned Robinhood as a top pick there for a swing trade throughout January because it has the strength to be able to do that. All right. There's going to be some stocks that start below this, and their momentum is going to be very bearish. They're not going to be very strong at all. Throughout the remainder of this whole year, this monthly level is going to change. It's going to change in February. It's going to change in March, April, so on and so forth. The yearly is not going to change, right? So that level, the level that we opened, becomes the most significant level for any given stock, including futures. So look at Nasdaq futures and S&P 500 futures, gold. Look at where that level is relevant to how we started on January 1st or whatever date that was. Um, Above that level, below that level, it's going to tell you a lot of information as we go along the year. All right. Has anyone done this part quite yet? You can either do that manually or you can have an indicator have it plotted for you. All right. So very quickly, I just want to jump over to the chart just to make sure everyone is available to see what they do here. All right. So here I'm on this stock. It's called TET1 Energy. If I go over and I just get the trend line tool, I can go to the opening price here, February 2nd, and I can click there and I can drag it all the way over just like that. And this is going to be the yearly open. I can simply do that like that. Or I could choose this price note level. That's also good. So you can actually have like the number associated, $7. And so now look at this. This opened here, the first trading day of January, super green, had a second green there. This stock already is starting the year up 20%. 20% in 2 days, chat. What is that? You're going to start to notice that, all right? And so there's another indicator called daily, weekly, monthly, yearly opens, all right? We actually provide these indicators as well as our own custom built ones in Teach Trade. You can find this eventually in our Teach Trade app. All right, Leslie actually dropped the link. Thank you. I was actually going to do that myself. Um, so that's the link. You install that indicator and more. That's very important to have. If you haven't already, you can go ahead and get the time frame continuity indicator as well. Paired with the opening prices, the time frame continuity indicator, which you see here at the bottom, it has a meter showing you how strong and bullish or bearish a stock currently is. And you can see this T1 Energy It is 96% bullish because it is above every single opening price. And again, it's mainly about this yearly one. All right. So TE, this itself, it could be a trading opportunity, by the way. I would actually suggest you guys put this on your list because this has been beaten up for a long time, and now it's actually on its way towards $10. My price target is actually $10 on this. And currently it's trading at 820. So that's another 20% increase from current levels. So it already started the year with 20%, could go even further. So we'll see what happens there. Um, so that's really important there, guys. The next thing you guys need to do as we navigate and start this year, okay? It's 96% bullish based on its current uh, trading. Sorry, I'm like losing words. On its current like trading environment, like what it is right now at its current moment. That's what it's saying there, Austin. The second thing you guys need to do is to identify major high and low zones. All right. This is not just simple support and resistance. You need to realize exactly where these lows and highs are. Go to your chart, put on the weekly and monthly time frame, and find where are you seeing price very abruptly reverse, whether it's coming down and bouncing up or above and coming back down. All right. So in this case, this is NVO again. All right. With Novo Nordisk, we identify these this high up here, right? We have this low down there, and then we have another low down here. All right. And so what can we draw from here? Well, based on some of the things that we already learned, the major components, how we can find consistency in what we're looking for, which is major price movement, is that the first thing that we did, is that we identified these highs and lows, and we can see what is the most recent thing this stock did. And the most recent thing this stock did is hit a low and then make a lower low and then bounce. Well, that was already step one of what we talk about when we're looking for reversals, the liquidity, right? We are taking lows where many stop losses are placed. By a result, that leads to big players like whales, hedge funds, looking at that as a buying opportunity. And guess what? Remember that range we identified between here with Novo Nordisk, between this low and that high? We're trading back through that range. Trading back through that range. Simple. And so this was a trade that started, a 2026 trade that started in 2025 after bouncing a little earlier. But this is way not done at all. For where it's currently trading at 55, Novo Nordisk, the ticker is NVO if you guys want to write it down. I'm looking at price targets of 61, 62, back to this other side of the range, very simply, because there's a high probability of that happening from the moment that a stock bounces, forms higher lows where we establish and validate the trend that is changing trend from falling, changing into an uptrend, and then targeting previous highs for where it will look to go. That is the common place that you guys, as you learn and understand the playbook for 2026, you guys, from now that you've seen it, and some of you have seen it tons of times, and this is your reminder again. Some of you, this is your first time. You will see this every single day that you trade the market. If you are out there looking, if you're out there looking, if you're like a junkie like me who, you know, needs to get his fix. You will see this every day, every week, every month of the market. This scenario happens. All right. It is something that is repeated so often that the amount of opportunity to even get practice with this, to master this, to get more is endless. Okay? And it starts with these 2 points. Because what you're doing with step one and step two is that you're setting the stage for some major opportunities out there. All right. Even if you're a scalper or a day trader, you guys need to know this and feel have a top-down higher time frame perspective so that you can at least understand the trend at any given moment and that you play along with the trend as it is forming, not after and not afterwards that it has already happened. You're going along with it, right? That's something that you absolutely want to, be able to do and be able to establish those trends further from there. All right. Erica says, usually the best way to see this reversal is when it crosses a moving average for more confirmation on the range. No, absolutely. What's interesting, I'm going to deviate just a bit as you say that. Oh my gosh, Novo Nordisk is like flying after hours. So I apologize if anyone wanted to see this. But it's still very much a great opportunity. But this we I put this on the slide deck, not thinking unless some of you who are listening to this broadcast, you guys went and put $3 million up in there, and you guys are driving the price. But what I wanted to make mention there about what Erica said is what we find at times here. This is one custom indicator that I have that you kind of see on the chart right now. This is our EMA. There's an EMA, a 9-day EMA that we see that's on this daily time frame, matched together with our what we call MVWAP. All right. And so MVWAP is similar to like a Bollinger Band of sorts. But you can see that as she had mentioned, especially those who use moving averages, as we had this reversal, that reversal and the higher high and higher low was paired with crossing this moving average, right? You see that this went from purple, like this downtrend or such, and then changed to a bullish green trend. So, just like that on that side, that there's confluence there as we're thinking through, looking at the reversals, the liquidity, validating the trend, whether it's through these higher highs, higher lows, along with any other confluence you may find, like moving averages. And where we're and as we very much focus on our targets, because our targets are what determine how much risk we are looking to attain based on where our stopping point is or where how much we're looking to hold, so on and so forth. Our profit margins, those become highly important as the trade goes along. All right, but we know that prior to even entering. So even on a significant level, we're crossing a very significant level, and that's also a bit of an averaged line as well. This purple line, that's the weekly MVWAP. Again, it's the average of VWAPs over 180 days, actually. So yeah, so this is all of that coming together. I'm really glad you said that in chat. And I'm really glad you guys are participating in chat, giving your 2 cents as well as we're what Teach Trade, especially if you're new or returning, it's all about the conversations that we have and the ways in which that we bring our ideas together because of our motto, which is each one teach one. All right. Um, and Julian, market structure, absolutely. That's certainly you're on the right pathway there with how we define this and how we do a top-down analysis. I like to use the word trend rather than market structure, even though market structure has some specific definitions in some contexts. But trend is something that I think we all kind of are able to, understand that as the underlying um, thing there. All right. So, and actually, just I'm gonna stay here just for a moment just to read through chat. For we have still have a bit here, and with the slides. But yeah, with Jerry, LVL, it actually doesn't. What we found is we actually have a lot of people use the opening range breakout as confluence with the LVL, at least when it exists on the daily time frame. We're actually about to uh, get to an example here on the next slide, where I'm actually going to showcase exactly what you're looking for, and how we demonstrate how these uh, work together, you know. And so the demo that we're going to do here, if you guys see this, the demo we are going to do is on Disney from today. All right. You guys ready for that? Let me know if you're ready for that. I really want to know if anybody saw this today, because it was very significant, very crazy, very significant from what occurred today here on Disney. And we can chop that up to some of the areas that as we look for them and what we just demonstrated here across the charts. All right. So I'm gonna switch over to my charts here. I'm just getting them set up just a little bit. Just make sure everything is in place. Okay, cool, cool, cool. That's fine. All right. So what we're going to do here, the big Disney. All right. So essentially, what Disney did in today's trading session. I know you can't see it quite yet. Here we go. What Disney did, and we're going to follow those same steps, right? Is that step one is that we identify where the opening price is. Okay, we identify where the opening price, the yearly open, the monthly open, they are the same level. And it's right here. This was from Friday where the market dumped, right? One thing you guys are going to find throughout this month, and some secret sauce I'm going to drop here that we're going to be covering in February. I'm going to cover it in major depth, is about how price of stocks react to these opening prices. Not just about trading above or below them, but what if we are trading towards them? All right. So number one is we set the opening price. This is the yearly open at that level, this pink line. The second thing is we mark these significant highs and lows. So we can see them. We can see them here. We see them there. There's one here. And then we have a low that's back here. We can go backwards. There's a low here. Does that one matter to us much? Possibly. But in today's trading day, it doesn't seem like it was fully so. Because we didn't hit that. But what we do want to identify here is that we have these highs, we have this low. Uh, let's actually identify from this high to that low. What range does that create here? All right. And so if you're able to see this highlighted box I have here, that creates this range, right? And so the very first thing Disney did as it opened up its Little Mouse and Marvel Cinematic Universe that needs some milk, and people only care about Spider-Man at the moment, that they did something. What we can assume is due to some hype behind, what is this movie? Zootopia? I haven't seen it yet, but Zootopia, the biggest animated movie ever, right? Some buyers stepped in who weren't present on Friday because some of the hedge funds were too busy still messing around with their third family and taking care of their grandchildren on their second cousin's side. But they woke up on January 5th saying, damn it, my 25 kids that I have to raise, they really enjoyed that movie. And so as they woke up, they saw that there were a previous low that needed to be taken out. And it happened immediately, as you can see here, where this price, it started lower, Disney, but it immediately traded back into this range. The moment that we are able to achieve a quarter of that range. The moment we're able to achieve a quarter of that range, right? Just like so. Let me actually do it like this. So we have this line, this blue line. The moment we achieve 25% of that, what do we do? That this moment, once we are 25% through any given range, that is also a validation moment. We don't have to make the higher highs and lower lows, right? Even though in a case this is making higher highs and lower lows, this is on a very smaller time frame, right? But that is the validation moment that we see. And what do we acknowledge throughout all of this? The monthly and yearly open. We gravitate towards that. And the moment we cross fully above that, what happens? You can even see it happening down here with the indicator and everything we covered so far. That momentum meter becomes stronger and stronger. It started from about 30-ish, ended off 75% at this point. And where do we end up? We locked on to the other side, right? Full time frames, all green. And we just took off immediately, right? I think a few of you actually did take this, and I see you guys in chat, right? Because, especially some of you who, the people who did take it, a lot of you are likely in our LVL program in our chat, right? This was the only, if I share this over here, right? This is my battle station, my dashboard. Disney was the only stock today out of like 400 plus them that I'm typically screening. The only stock that broke through a range on the daily and on the weekly as we hit a previous low and traded all the way back through a massive range. All right. You can see Nvidia has some problems today. Nvidia, on the other hand, was not looking very cute. Some of you may have been able to get an opportunity for Nvidia to the downside, where we have a bit of a cool off from some of the semiconductors for whatever reason, right? But here on the other side with Mr. Mouse, we had this occur, had this as a very strong outcome here that we can see, where this, if I can sort of showcase it, had this 73% win rate, had a 2.4% move, which is actually a lot for Disney because it's moved over $4 in a single day. That is something as an outcome that, even if you didn't have, or rather, what I want to say is that the main thing, even though these tend to happen during the day, right? With everything considered, all of this, anything you kind of see that you don't recognize, I'll sort of talk about it. Don't, if you have any questions. But the main thing I want to say is that prior to anything that you guys see this year, because this is going to happen. Like I said, every single day, every single week, and every single month. Because right now, as I said earlier on Robinhood, right? Robinhood, very quickly, we have this low, we have this high, we have another low back here, right? But if we find any sequence between a high and low, that becomes a range. Bada bing, bada boom, right? If we hit one side of a range, last Friday, Robinhood hit one side of the range and stuck its pea-brain head back inside of that range. If you set the stage, that means that the actors on your play, double entendre, when you set the stage, that means the actors on your play are going to do their thing. and act out, right? And so today, for Robinhood, as it formed this hammer, it traded back into this range. It validated its trend by trading 25% of that range. How far can Robinhood go based on all of that information that we learned so far? That becomes part of the playbook for just having it outlined and as simple as just defining the range. Remember those three words all year, family. Define the range. Set the stage so that your actors can act out. All right. And so Robinhood, as I said, top pick, one of my top picks of the year, at least for January. Many catalysts along the way. It's not too late to enter within this one, right? So we're going to see some more opportunity from that as well. I just wanted to point that out as well. We're going to go back to the slides real quick. I know I've had you guys for a while, family. This was the 2 hour session that we said that we were going to grind and find some consistency and some understanding to recalibrate our brains for where we want to, start to see some opportunities. All right. We all good, family? The question was, how am I measuring the 25%? It's of the full range. You can either use the rectangle tool on TradingView, or you can use the Fibonacci retracement tool. Only during regular trading hours, Michael Gillum. When you're trading stocks, yes. When you're doing futures and um, or excuse me, when you're trading stocks, you're not really considering the swing highs and lows, right? From the pre-market. It's typically during real market hours because why? Why would I say that? Because of the volume. The major volume in the market is present during the actual like market hours. All right. It's not as present in the after hours or so on and so forth, right? So those levels, whether they are the highs or lows, they're mostly significant during market hours for how they represent themselves. When you're thinking about futures, whether it's gold, silver, S&P, NASDAQ, if you're trading Forex or crypto, so on and so forth, it's a different game because the volume is typically present, in many areas, right? But a lot of traders, especially ICT traders, I just learned today there's something called ICC out there. Let me know if you're familiar with that. They use the time zones of other markets for reference because they need to know where volume was present at a given time for when those highs and lows were formed or when those ranges were defined. You guys understand that part? So people are looking for volume according to certain ranges. All right. And you can do the same yourself, especially as you're watching volume. The third thing, I don't have a slide for this. I had steps one, step two, and step three, what I'm going to talk about, that's not on the slides, is that look for increasing volume. Whatever you do, don't worry about any of these stocks where their average volume is under 5 million. Screw those other stocks if you're trading options and all that, right? If you want to hold for investment in penny stocks, be your own person. I can't stop you. We're all adults, I hope. But with options trades and the things you're looking for, look for volume to be increasing. Especially if you're looking at the past 3 days or so, see if volume is increasing like higher than yesterday, higher than the previous day, right? That's when you're going to start to notice like those are where like that's where the real power moves are looking to happen because that means attention is happening. That means FOMO traders are actually starting to come in. It doesn't mean that you're too late if you see volume increasing. It just means that attention is significant and people are actually taking whatever trade or opportunity serious that may be available there. Definitely look at that for that. So three consecutive points of price increasing. If you're able to use, or excuse me, three consecutive points of volume increasing. if you're able to pair that with what we talked about with the reversal points, with EMA crosses, mind you, or those moving averages, as we had discussed, any of those things, that's going to put you in a significant area, right? The one thing, and I'm going to tell you guys, I'm telling you guys about this volume thing because I'm a little bit of a junkie when it comes to finding trades and opportunities and everything out there. I'm looking at so many stocks, scanning for them. It's very easy to stumble upon a bad fix, if you know what I'm saying, right? That, oh yeah, it looks so good, the setup is there, but nobody cares about your I'm all out of analogies, but nobody cares about, some little stock that only you do, right? You kind of have to find the ones that everybody, or not everybody, but that people are sort of crowding around or seeing as that opportunity. You know what I mean? If it's only you out there, it's unfortunately not going to play out because you need volume in order for the stock to actually fulfill its move, you know? One of the best, what's the best volume indicator? One volume indicator I like to use is called RVol, or excuse me, Volume Plus is actually what it's called, where it uses relative volume. I'm going to drop that link down here. I love that indicator. I started my trading career in 2020. I've been using that same indicator ever since. There's been many that have come and gone along the way. I don't even care. This does enough for me to at least know when volume is significant or not. All right. So want to drop that resource for you guys there. And also, if you wanted to be able to capture some of these movements constantly, we have people here in this chat. If you're already aware, we have built comprehensive, in-depth indicators to make sure that you have awareness over these moves when it's actually happening, who it's happening on. That's the reason why it's of no surprise to me that there's several people in this chat who caught Disney. And Disney is not really the stock that's like so common that people are looking at, you know what I mean? But quite a few of you were able to capture this. I'm really happy and excited for you guys because you're able to have that clarity there. So this is still available for early access here in Academy Live. Um, we have some things we can't share with you right now, but just keep watch over March. March, March. March is going to be, that's all I have to say. March is going to be where a lot of things like change so crazy for the better. So we want to be able to, be able to give you access to this, at least if you're able to, want to test this out and at least get some consistency under your belt for at least being able to identify when these reversals are happening, how to see them, how to validate what is a positive trend and repeat that. That's what we're going to be seeing overall. All right. And so, Uh, this is where we're going to spend the last 14 minutes together, family. We're going to cover what your blueprint is going to be, as well as what I'm going to say to you from my expert advice. I've been in these trenches for, it's going to be 6 years this year. I can't believe it. I'm growing gray hairs already thinking about it. 6 years of experience and I've been here every single day, been watching all of this, thousands of trades that I've taken so far. So this is what I want to offer to you for your first 28 days of 2026. All right. And before I jump into that, there's this question about the time frame continuity indicator. Let me see if I can share that with you. We have a link in our Discord if you aren't already a part of it. We have a free Discord where you can ask us questions and also inquire about any of the resources that we have. So what that is, I'm going to just drop that link very quickly. Uh, Larray. if I pronounce that correctly. I'm very big on pronouncing names correctly, so always, feel free to let me know that. But the first 28 days of 2026, what is in store for you guys? What are you guys going to do? The very first thing to know, don't rush this year. All right. I'm going to slightly tease anybody who this relates to. If you woke up today and you were annoyed or pissed or you were just like jumbled and all over, let's relax. All right. Relax because the first trading day of the year, any given year, it always does this. Trust me. In 2022, the very first trading day of 2020, yeah, the very first trading day of 2022, and it happened to be my birthday. Maybe the blessings were delayed for, being blessed with another year of life. Maybe they were delayed, but that was not the best day, right? The market got destroyed, and there were many opportunities for that though, to take puts and become a big old five-figure trade maker from that very first day. But that wasn't me. I guess they skipped over me in terms of the prep moment for that. But what you need to know, in all seriousness, do not rush this, right? It always feels hectic at the start of the year. And it always feels, and especially as you hop off this call, some of you are going to scroll Instagram, you're going to scroll Twitter, and you're going to be met with loads of screenshots and percentages and people calling you stupid to your face for not having taken that trade, or they're going to flex on you and say that they're better than you or anyone else because of what they're doing. Ignore that. Try your best to ignore that. Scroll past. Go watch some videos of some kittens or something, right? Because you know that your road is defined by you and your actions and what you are looking to achieve with this amount of time that you have here. All right. You have 260 days. I'm going to repeat that again. You have 260 days. You're going to hear that from me one more time. That your goal right now is to collect data. January, these 28 days, collect data about the market. Collect data about yourself. Collect data about the information you are consuming and what pieces are actually relevant to you. You guys might have heard me say quite a few things today, and there's going to be points that stuck out to you, things to remember and to think about. And there's going to be other points where maybe that doesn't fit into my full system, or maybe those aren't the stocks that I want to fully watch. What you have to do is collect data, try new things, attempt those trades, take those risks because the real fun is going to come in February. February, historically, that's when we have enough data to really make something shake. All right. Every year, I always see it. Anyone who knows me from the Wealth Squad, February, the amount of trades that were blessed there in 2021, that's what got me even put up there, right? Because of what came from that opportunity and as well as strengthening the muscle. You guys know we're starting the new year, new me. Some of you are back in the gym. I'm back in my gym getting rid of these love handles on the sides here. You start from a new after taking the break. Oh my God, those sides start to hurt and you feel sore from the amount of work you have to put back in. But when you're training that muscle, you have to collect that data about yourself. You have to train the muscle so that you're able to get that practice such that when the real major setups actually come by the time of next month, you're already going to be ready to be able to take that opportunity. Trust me, and we can make a bet. I don't do any of that Polymarket or Kalshi stuff, but February 14th or so, you're going to remember back to this moment when we talked about this here on this. If you're able to commit to these steps over the next 20 days, all right? Trade only validated setups. All right. We have shared quite a few of this setup that we talked about here today. I want you guys to take that, develop some consistency. Again, we're going to email you if you registered for today's meeting, we're going to email you all of those components and the resources so that you have and you're able to study it and get practice with it. Some of those areas you're only going to come from actually um, doing it and practicing it, but you need to know and write it down step by step. It might not be clear right now, but feel through just trading through the setup and feel through the ideas for what is needed and qualified for a trade to be deserving of your time. We don't work for these damn stocks, right? These stocks in this market isn't our boss, right? It's how much control and confidence that we know for certain that this is us defining our legacy and that the actions taken are what define the pathway and how we grow or how we remain stagnant, right? We're going to provide you a full checklist. And this is the simple checklist here if you want to write it down. Pre-market prep, execute, journal, how we get better. You're going to discover from what worked, what didn't, why is that? And then whatever does start working, right, as you are collecting this data over this first 28 days, focus on that. Some of our students are aware that's what we call heat. When you have a system that after collecting data, you're able to know it has been proven for how you find news, how you look for the stock or identify the setup, and then how you manage the trade. For those components, for those components that we just identified there, that has to be clearly defined for you. And it's not immediately obvious for how to define that. It's just you don't want when you wake up every day and you're thinking about the stock market, okay, a new day in the stock market. You don't want to feel the process that you get to getting to an answer to feel jumbled. Take it from me of all people, please. I'm profitable. I've been profitable by, the grace of discovering what I needed to eliminate in order to focus in on what works for me. And I've blown plenty of accounts, but I've made out profitable, and I'm sharing that side with you for someone who can be very disorganized and who's very busy, as we all are, but that we carve this out and have a dedicated process because we take trading seriously. You have to take trading seriously. This isn't just something you're doing for fun because trading can sometimes be not fun at all. This is something that we take seriously, just as we take how we make money, how we survive, how we provide for whoever's around us. Taking it seriously and knowing how we carve that time and availability out for us is what provides us that place such that it can have a proper place within our life, right? And so within the plug and play system, we just understand as we're sending all these resources to you as what we covered here. Last year was a place of realization for many of us, right? This year is going to be the place of execution. Less hesitation, more clarity over exactly what we're looking for. All right. How we define the structure is that we want to make sure that how we're going through and managing the strategies we're developing. What you need to know is how we're attaining more information and processing it. That's really important. I'm just currently learning about what ICC is, as I mentioned. ICC, I'm going to discover what that's about. I'm going to see, does it have any place in my current playbook? It doesn't have to necessarily have it because I'm very comfortable where I am. And I don't want to deviate too far if I know something that's working for me. But as for many of you, especially as you came to hear and absorb, is there new information or is there a gap in what I'm thinking about the market that I need to fill in. And is this person who's speaking going to be able to provide that or give me a new perspective to consider? And for anything, that's what we always have to be open to that information because that's just what adds to the space for where we find ourselves and get comfortable, right? How your overall system, or excuse me, as you're using your broker, what that gets defined for you yourself and how you have TradingView set up. That's very important so that you're not fumbling over yourself, twiddling your thumbs, and more when it comes to actually going off and actually making trades. I've heard from quite a few of you as you guys have been with us for quite some time. I've heard some of your frustrations with executing on some of your brokers. I've also heard that you feel as though you get stressed from missing trades because it feels as though you take your eyes off the road for a moment and then you're swerving into a corner, right? Or that you miss your exit. That's maybe the best analogy. You take your eyes off the road for a moment, you miss your exit where you're supposed to go. For the trades that you've been planning, that you pre-planned before market, that's something that we are avidly correcting for a lot of our students and making sure those frustrations are lessened overall, right? We actually, some of you, press one in chat if you've had one of our pre-built stations, as we call them. Like if you've had one of our installments on TradingView. Some of us know them as battle stations as well as dashboards. So we've built quite a few custom dashboards here on TradingView. And we provide that to our students so that you're able to at least have more clarity over what you're seeing. Even this one here today, this is our range rush reversal dashboard where we see which stocks are breaking out and what opportunities are there so that we can at least have a top-down overview of what's occurring at any given moment, you know. So like AMD, Nvidia, Marvell, all of these breaking out to the downside was significant, especially with Nvidia, which fell quite a lot. One thing, by the way, before I forget real quick, there was this Jerry had asked a question earlier about the range rush reversal and the LVL. I just wanted to make note that the LVL here, when we talked about Disney, as we retraced 25% of this range, we got to this previous high, or we crossed this 25% level, but that was actually the moment right after that where the opening range, which is 30 minutes after the market opened, that was right here, right? You kind of see, you kind of can see that we had a confluence there where if we have a trigger on the weekly and also have the opening range, both of those could have served as entries up to this target on the other side. And that's again what the indicator had defined at least very clearly for us for what happened here, right? So it defined where the TP levels were as well as where the entries were. So that's one example. And so some of the battle stations we've built here, like this one, so that you have full overview where the LVL is, what stocks are triggering, always knowing and not being too prone to missing out on opportunities. Those are some of the things that we intend on so that you have the blueprint that you're able to identify these trades more easily and be able to take advantage of the moves as they're happening in real time. If you've been with us and you didn't know that we do this, now you know. And we have a lot of fun with that. And we have quite a lot of us sharing that information as well. All right. And so as you navigate, if there is more to be had that you're looking for in terms of if you're just looking to develop a strategy, if you're looking for this whole ecosystem, we typically have and spend 5 weeks with you in terms of developing this even further. If you want to take that first 28 days and have a partner alongside, that's something that we avidly do for a lot of our students. We're going to have some live trading on Wednesday. We're going to send an email about that if needed. I'm also going to be live tomorrow trading. I'll make sure you guys have all the details and know how I do this in real time, how we often do this. For example, one of our students, Jeremy, this is kind of the same blueprint system that we installed for him. And Jeremy, you might be here as well. But he has it such that the tools are able to automate his process so that he just knows how to plan the setups pre-market and also knows, okay, he gets the triggers every single day as they're happening in real time, as they're navigating through. That's typically how we do the plug and play. A lot of our, quite a few of our students as well, they ask for one-on-ones. That's something we're also open to if that's something you just need a second opinion on or you just need this installed for you live. We can kind of share screen and do more of that as well. And then just, letting you guys know that this is a full resource behind you if you are not here within us within the community. We have our Leslie, we have Ray, Shay, and Rose. We have Jasmine, Jamal, who helped us here on the session today, and Aman. We're really grateful for the contributions. They helped us a lot here in 2025, and we go forth with how much we're able to provide. Jamal, you shared this morning that SoFi trade. I was really mad I missed it. SoFi and Affirm this morning. That's something we actually planned this morning, and it just played out as we had expected, and maybe a few people were able to capture that. But that was certainly takes, the community in terms of sharing these ideas and more. All right. And so, some last checklist items before we at least close out this session. And if you guys need to know where to find all of this information and join the academy, if that's something you want to do, we could also provide those links. I know there's a few questions as well about, renewals and things. We can get to that after the session's done. But so far, I really hope you guys have enjoyed this 2026 session, the trading blueprint. Um, some housekeeping checklists. Make sure that your trading platform is updated and functional. Update your apps, please. TradingView is actually publishing some AI automated trade. What's it called? Like chart patterns. It's pretty cool. I got a beta of that. I saw it a bit this morning. So, make sure you update your platform, update your app. It's kind of interesting what they come up with. Refresh your workspace. Burn some sage, figuratively and literally, if you do so, please. And reset. What I'm going to recommend for you guys, actually start a fresh account. If you had a losing last year, man, screw F last year. Start a fresh account so it just looks so clean and beautiful and just fresh. All right. We want to remove that energy. We don't want to focus on, and I'm telling you guys because it actually goes a really long way. It might sound like, oh, this is some, you know, motivational talk, but it's more so really as we identify how mental this game is and how much we hold on to, especially the losses that we may have had, it can be very difficult. Take it from me. Um, and get rid of those drawings and indicators on your charts. When there's an indicator that really doesn't do anything for you or just makes you hesitate too much, be honest with yourself and see about trimming and prioritizing the ones that do more work for you. All right. Take that as your major checklist item there. Feel free to take a screenshot here as well. You have 5, 4, 3, 2. Your broker. All right. Think about those commissions. Think about that fee that you're paying when you're making a trade. Review what that is and compare them. You can easily go to ChatGPT or Claude or Google, whatever your preference is, and ask, compare, compare brokers available in my country, commission fees, and availability, right? Think about that. Um, If you are trading under an LLC, you're able to write off commission fee prices. That is what I've heard. But if you're just trading as an individual, that stuff adds up a lot. There's everything around here trying to take our money and make us, not, especially if you're trading in large volumes. If take it from me, someone who trades like hundreds of contracts a day, oh my God. If I didn't choose the broker I was choosing right now, it would be really bad because I would be paying quite a lot. And so I use TradeStation. I used to use public.com, which they would pay me to trade. You would actually earn commission based on every single trade. And consider these other areas, right? TradeStation, I use that. What's crazy, and might sound like not relevant, TradeStation has a concierge. I was living my regular life on Friday, and I get a random call from TradeStation. I think something's wrong. And they said, "Hey, Taylor, I just wanted to give you a call to wish you a happy birthday. Thank you for using our platform." And I was like, wow, I've never had a broker. Maybe they just like me using their stuff and spending money with them, clearly. Because for them to call me and personally, wish me that was certainly something. Take into consideration a broker that has customer service. Please, because when things go wrong, you don't want to be talking to an AI agent. All right. But that was something that was quite interesting. So I'm gonna recommend TradeStation for anyone who, uses it. If you're still looking for a broker or if you want to try a new broker, they have reduced commission fees when you're trading directly on TradingView with TradeStation. That's something to consider if that's something you want to just think about if it's finance wise. But think about if you truly feel like a broker is holding you back or contributing to losses that shouldn't have happened, think about that. All right. Um, do a performance checklist. I'm going to send you guys as part of your email a link to Journey, so that you can do a full reevaluation of what worked and what didn't in 2025. I'm going to send you guys a link to that. Some of you may have already done so. We want you to make sure that you guys at least take one look at 2025, think about it, and then move forward. All right, and don't look back. That's what we want you guys to do. All right, and your most profitable setups versus your worst, and document some lessons that you might have learned last year. All right, so things that you know that you don't want to repeat. So in closing, I'm gonna stay around for just a little bit after I end the recording so I can answer just a few questions. We're gonna close this out because you guys have been patient. I appreciate you guys. It's always a blessing to have your time, as always. If you are brand new or if you're coming back to us, if anything that you liked about today, if you want to just hear me talk, hear Jamal talk, hear our mentors help you and answer your questions, make sure you're taken care of, making sure that whatever your journey looks like in 2026, that you have some help, feel free to join our academy, such that everything that we covered today, we track your performance from beginning to end so that you know where you are, what you need to improve on, and how to achieve what you need to look forward to. All right. So that's what at the moment, if this is something you want to take forth with us, we are going to have our trading sessions every week with the Academy, and then our major mentorship, our next one is February. I'm saying that to everyone, including our existing students. February is when we're going to do our major first semester as we're looking towards this. But again, if you want access to all the resources, the indicators, and everything right now, you can go ahead and join in and stick around with us. And so I just want to let you guys go just to say that 2026, this is the third time I'm going to say this, 260 blank trading days. They're blank. They're ready for you. You have all these chances. You can start motivated. This is your choice. You can either start motivated and kind of drift off by March, or you can install a system that compounds and goes towards giving you the consistency loop that you're looking for so that your goals can be made 10 times over. All right. That was the major purpose of today's session. Um, the last point I'm going to leave you with, and then again, I'm going to answer questions. The goal is not to make money. Sounds crazy. Because some of you are like, man, I definitely joined and listened to you talk for 2 hours so I can make some goddamn money. But no, it's to discover how you make money and how that system develops, how you have overview of the major events that are happening as we speak, the events you look forward to, the Fed, what's happening here internationally with this war, whatnot happening, um, the valuations decreasing, the dollar, those specific areas as we watch January into earnings season, that's going to be very, having oversight of that is how we can see where we fit in and how the system we play, the data we collect, that conveys how we fit in throughout the rest of this year. All right. The profits will come from the process. Trust it. And the process comes from the experiments. The experiments, the data we collect, even when losses happen, because they will. We just have to have the space and we stick to it and we know how to identify and come into any trading day comfortably and of ease of mind. Let me know out of 10 how I did today, family. This is my very first session of 2025 or 2026. See, even I'm messing up. My very first session. I, took some time to prepare this. Jamal, Jasmine, this whole team helped put this together. And we really want to make sure that you guys are able to start this year. You have that energy, you have some places to look, and also you have the resources where we're going to send to you right after this, so you can even do a deeper dive. All right. So it's always a pleasure to do these sessions. I'm going to pray for you. I'm going to trade alongside for you. I'm going to believe in you. And we're going to make this 2026 the best year that we can see fit.